All right, welcome to the video. Today we're going to be breaking down this trade. Not only just this trade, we're also going to be breaking down the strategy. So by the end of this video, you're going to have a good idea of what my strategy is, and it's completely free. And we're just going to keep going from there. This is probably the fifth time I'm recording, so if I seem a little mad, so this is. Let's clean this up first. This is all cluttered. It'll make sense in a little bit. So let's just go ahead and clean all this up. All right, so I'm gonna leave that one there. Oh, get that one. All right, so what is my strategy? So if you're coming from Instagram or if you're coming from the past when I upload a little bit, I used to trade mostly price action. So, and I was using areas of interest. I was using EMA rejections. It was not a bad system. It was a really good system. I was actually pretty consistent with it. However, I found myself losing more with these current market conditions. There's a lot of volatility. For example, look at that. Look at that. Right? So it was pretty hectic. So I had to adapt. And this is the result of my adaptation. So what am I doing now? I'm doing supply and demand. And quite honestly, I love it. It's a lot more fun and it makes more sense. And honestly, it's nothing new. Didn't reinvent the wheel or anything like that. I didn't even create the strategy. What I've added to it is uniquely mine because from my experiences, I see things the way I see them. If that makes sense. Anyways, let's just get straight to it. So, this is what I see in the morning. So, first of all, let's go ahead and go straight to this. Now, what are these fancy colors here? So, these fancy colors here is an indicator. What is this indicator? This indicator is for your sessions. Now, I obviously know when session starts and whatnot, but for the specific charting that I do, I need them. Now, what is each session? We have Frankfurt session. We also have London session, Trade New York, and then New York, and then Asia session. Unfortunately, we're not going to be talking about Asia session because it does not apply to this. If I was doing more JPY pairs or audio D pairs or any of the Asia pairs, then this would be more relevant. However, I don't really trade Asia session much anymore. So I usually trade New York, as you can tell. Most of my trades have been in New York, and there's a good reason why, and I might talk about that in a future video. So, what do I do as soon as I wake up? The first thing that I'm doing is I'm identifying key levels. Let's go ahead and delete that. So, my key levels, there's two specific key levels I like to use as confluence. Remember, this is confluence. So, as you can tell, we have round psychological numbers. Now, you might be asking, what are round psychological numbers? So, psychologically, buyers and sellers just love that number. And that's it. And you can tell. So, notice this look, right to the pip, it reacted. And prior to breaking this price, it hesitated. Now, in this instance, the market literally sneezed, so it broke through it. Logic, and that's just what the market's gonna do. But once price settled, it sneezed again, and guess where? Around this round psychological number. We could go back to the past and see. As soon as price came up to it, there's probably other reasons here too, probably some supplies, but it didn't break through it. I don't know why I stuttered there, but we're gonna roll with it. And then look. Same thing here. Look right to the candle closure right there. So it's a very strong level. Obviously, you shouldn't be trading off around psychological numbers. You should be using it as a confluence. One of my favorite confluences since day one. Love them. Now, our second confluence we're going to be using here is the highs and lows of days. Now, what is the high and low of day? Well, it's literally the highest point of that day and the lowest point. Very self-explanatory. I could have read you a dictionary and you guys could have been, absolutely fine. Anyways, how do we identify them? Well, you can literally go to the daily and just mark the top and bottom. However, I believe there's far more accuracy when you do it within a session. So we're going to be marking it twice. We're going to be marking the highs and lows of this day and then the previous day. So you're marking 2 days worth of highs and lows. So, and this is how I do it. So you're going to do it within a session. So these gray areas here are outside of a session. The reason why we do it within session is because we want the volume. And this is where likely the pushes come from. So boom, we have a high day there, and you're gonna notice how I color differentiate them. Now, if you're doing this too by yourself, you don't have to color code them the way I do it. I just recommend doing it whatever's clean. I have this chart gray because I don't like staring at a white screen. It's too bright. I'm too sensitive. But notice how we're gonna mark these up in a different color. Now there's a reason. There's a reason for my insanity here. So notice how that's yellow. Now, when I go to do my next day, what I'll do is I'll delete these ones and then I'll just recolor these to the yellow ones. That way I'm just ready. So if that makes sense, just let me know in the comments. If it doesn't, I'll try to explain it better than the next one. I'm not really good with this, okay? Give me a chance here. So now that we did that, what is the next step? Do we just take a trade? Absolutely not. I preached in the past, you always have to do your top-down analysis prior to your trade, and this is kind of part of it. We're just marking out our confluences, our reasons to take a trade, but we don't have a reason yet. We don't even know what direction we're going. So that's what we're going to do. Now, I use the higher time frames for my direction. So price has been a little choppy on the 4-hour, just a little bit, and we have these massive impulses. So I chose to use the 1 hour for this instance. So we're just going to go straight to the 1 hour. But typically, I would recommend going to 4-hour, daily, and weekly for your direction. So mark out your supply and demands from those areas. For this example, for this trade, I only used the 1 hour. Now, supply and demand. How does supply and demand move? It's very simple. It's literally ping pong, right? You have a supply right here, and notice how price came up to it and then used it. That's typically how price moves. So supply, price finds supply, it's going to go find demand. And there was really no real demand here, but if you were to take this trade right here, you would have hit take profit. And unfortunately, I didn't. Anyway, straight to the point. So we need to find our direction. So notice how we created a demand here. And then we created another one right here, and we're still going up. Now also, notice this. We had already used this demand. So I'm going to do this in order block form. The lines that I'm making here are just half of the order block. It's the same thing, but more precise. But for example purposes, we're going to use order block. Look at this. Price had already used this area here. I'm going to go one candle ahead. There we go. There you go. Oh, too much. Go back. There you go. Oh, right there. All right, cool. So this is what I was presented to when I woke up that morning. So notice how price candle closed beyond this. This is obviously used, so we cannot use this as direction. So where is the next area for price to head to? It's going to be that 1 hour supply. Now, why? I'll show you exactly why, my friends. So if we come up here, this is how the market moves. So I drew this in the previous recordings where I obviously messed up. So I'll just do it again. So price action wants to do that. It wants to create higher highs, higher lows, lower highs, whatnot, wherever's bearish or whatnot. So there's that. Now, notice how price reacts to a structure point, right? So that's what price action wants to do. And this is a great way to trade. Like you create a supply or demand right here. Look at create a demand, boom, goes up. However, when you have voids, that is a very strong area to take a trade. So look, we have a massive void here. What is price action going to do? Price action is going to, oh, wrong one. My bad. So notice price action is going to want to do this. And there's nothing stopping price. Price is not going to suddenly do that again. I mean, it can, but it's going to likely come up to this supply here. And then give a good push down. That's usually how price action moves, especially with voids. Think of this analogy here, right? You are a Karate Kid. You are painting that fence, right? When the market paints the fence nice and slow, everything is filled. Every structure point is used. However, if you're in a rush and you have a massive impulse, the market needs to correct yourself. You need to correct the paint. You have gaps in your paint. So now the market's going to retrace back to cover its steps and then continue going down. So that's what we're doing here. We're filling this void. There's nothing stopping price from going up. That's why I took buys. Now let's discuss entry model. Entry model is quite simple. So now that we know we're taking buys, what should we be identifying? Demands, exactly. So, went a little too far there because that was literally our entry. So, now I used the 15 to the 1 minute for my entries. Now, look at this. We have a 15 right here. Let me identify that one better. 15. And then we have a 15 here technically, but this had not closed fully yet. So I cannot mark this one yet. So, and we also have one down here. Now, this is the best setup right here, but be logical. Let's think about it for a second here. So, notice most of my trades are anywhere from like 20 pips to like 45 pips long, right? So that's about a 50 pip move. Now, that's a pretty good move there. Now, let's think about it, right? What are the chances of this being truly used, especially if you see a push after this, right? I was expecting price to come back down here after seeing this, but it just chose to break these highs. Look at this. You're expecting price to have a 80 pip move back down here, then to buy? No, sorry, that's not happening. I mean, it can happen, but you might as well take sales at that point. But we already established on the 1 hour, there's nothing to stop telling price to come back down. So we could use this area. This is logical. This is only like a 40 pip retracement. We could expect price to come back down here, but I saw this other impulse. I was like, all right, cool. We have a 5 minute here. 5 minute, boom. And now we have a 1 minute. The 1 minute is crucial. That is your entry model. That is the entry confirmation. Now, notice they have to be in confluence with each other. That's why I marked these specifically. Look at that. That's in confluence with each other. What constitutes a supply and demand in confluence with each other? They have to be within a 10 pip range. Now, if you have a high day in confluence with your supplies or demands, that is an immediate trade idea right there. In this instance, we had the high day, the round psychological number, and then two demands in confluence. Now, what constitutes it as confluence? 10 pips. And guess what? That was 8.6 pips. So that's in confluence. Now, preferably, the best one's going to be within 3 pips. And that's within 3 to 4 pips. Perfect. So what do you do now? Well, price is going to come back down here and tap one of these demands. Now, sometimes price is too accurate. So you want to place your limit order or execute your order right on the closest one to where price is going to hit, and then typically it'll go up like that, or it will do something like this. Use that demand, wick down here, and then shoot up. And you're gonna see how it did neither of that. We're gonna see something pretty cool here, and I was kind of surprised too. And we're gonna go with a 12 pip stop loss, and then we're gonna target that 1 hour supply. I target just below it, just because I don't know if there's going to be any supplies created up there. So we just targeted that, just like that, and we're just going to let the trade play out. And you're going to see it just wicked right into it, and it just took off. Boom. We're literally wicked right into take profit. Look at that. Minimum drawdown. That is a solid trade right there. And that was literally like less than 30 minutes. And that was a really good day there. That was like a $4,500 day across my prop firm account and my funded account. Honestly, couldn't ask for anything more than that. And matter of fact, if greed had gotten the best of me, we could have taken this trade twice. Don't believe me? Watch. Look at this. Price came back down and then gave the move again. However, you don't want to do that because look, we tapped this supply. We could have easily gone down. Look at that candle. That's selling pressure right there. Anyways, that is it for this video. It was kind of long-winded. I'm not used to this type of thing. If you think I did a good job, just let me know in the comments below. Follow my Instagram at fxmonty it's with a 0. And also, I just dropped my signals group. We are doing a trial run. All the trade ideas are for free. I dropped the signals in the morning. And transparency's sakes, we actually lost this one. And actually, looking at it, it really was not a bad trade at all. Let's go ahead and look at it. Right, we're still at stop loss. Like, it wasn't even a ridiculous loss. So these type of things happen. But anyways, everything's in the description below. If you guys are interested in my content, please subscribe. If you found this helpful, please share it to somebody. Anyways, bless you guys. I hope you guys have a great day. Ciao.